great analysis, because as an exchange, they understand what the hedgers are doing and what the hedgers are requiring in the marketplace. And so the information they provide is very thorough with graphs and charts, and I definitely like to use it when making my trading decisions. So definitely, when you go to these websites, sign up for some of their free information. It'll definitely be worth your while. Next, we have the government as a source. Now, earlier on, we spoke about how different contracts have position limits and how you have to report particular positions. Well, when they report these positions, they report it to the Commodities Futures Trading Commission, the CFTC. And great source of information about what's happening in our industry is the CFTC.gov. They also will tell you different information about companies that are either fraudulent or committed fraud or crackdowns on Forex. Great source of information just for little, almost like I said, innocuous things. And we'll talk about one of the primary reports that really helps all speculators, called the Commitment of Traders Report, the CFTC compiles and issues weekly. Great report. You also have the USDA when you're trading agricultural products. You have the DOC.gov. You have the FederalReserve.gov. All of them giving you great insight into financial products. And then you have specialty sites that really talk about commodities and really the hedgers really like to use in order to determine their marketing strategy and how much they're going to plant and how much they can put in the marketplace. One of those is the Economic Research Service at ers.usda.gov. It's a subset of the U.S. Department of Agriculture. We have also the National Agricultural Statistics Service, the Foreign Agricultural Service, U.S. Geological Survey for minerals such as gold, silver, and now with the London's Metal Exchange having more of an effect in our futures market, you have opportunities to trade aluminum, tin, and these reports really give you an idea of what the supply and demand is. And then just general federal statistics. There's about 2 or 3 that people like to use for stocks, such as the job report or the new housing report. And there's so many other statistics that really can feed into how you trade the markets. These reports just are varied. They import, export, amount available, who's buying what, when they're taking delivery, which is important for us as futures traders because it gives us an idea of what markets we should be trading in order to anticipate these changes, weather concerns, mining growth, and it just goes on and on. Again, it's fundamental information, but since we deal in a supply and demand scenario, it's good to have that background. And at the very least, if you read these materials and understand the reports that are put out, you have a better and a deeper understanding of the markets you're trading, which gives you longevity. So that even if you trade with technical indicators, you know what the hedgers are doing and what they're reading. And then the frequency of these reports, you have to go to each one of these websites to obtain them. Sometimes they come out the first Monday or the second Tuesday. Each one has a different time frame. And since there's so much information, it's best to first figure out what markets you want to trade. And we'll discuss this in a moment. And then backtrack to what reports affect those markets. Next, we'll look at news as a source of information. And news as a source of information is just varied. You have many local companies and specialty companies putting out information. And one of them is, for instance, you have lentils and chickpeas and spices. I don't know if you know this, but futures are having a huge renaissance worldwide. India just opened up an exchange. I was in Romania all of last year on 2 or 3 different occasions. I've been in Europe, basically talking about these new and evolving exchanges. And it's going to create more and more opportunities for us as traders to invest and to have opportunities to trade these foreign markets. And in the new Thai market that's starting up, some of the trades that they're doing is spices. So there's reports out that talks specifically about lentils, chickpeas, spices, and other things. Then there's also shipping companies that put out a lot of information. This is just one example, Hotel.com. And they ship from the U.S. to West Africa. And because of their involvement in these areas, they know a lot about who the suppliers are and what's happening with coffee, what's happening with cocoa, and what the general political climate is in getting these products out. And so reading their shipping reports or their reports on West Africa are very interesting, and it really gives you a feel for what's happening in the actual trading market. And then we fall back on the usuals. You have Oster Dow Jones putting out reports, and then there's Bloomberg. And then sometimes you'll trade with a company, and they'll also put out their up-to-this-minute AP-style reports, all of which is great. What I like about some of the reports is that they're specialty reports or they're regionally narrow. That helps us when we have different products coming from specific areas that may provide 70, 80, 90% of all the goods. When you look at West Africa, places such as Ghana, majority of cocoa beans are coming out of there. So if they're, chocolate beans or cacao beans, however you want to pronounce it. So the majority of the beans are coming out of there. And so understanding what's happening in that region really is very important in deciding how you trade. And it just gives you more perspective, rounds you out. The frequency of these types of reports, they come out multiple times daily if you're looking at the Oster Dow Jones or the Bloomberg terminals. Sometimes once a week. Some of the shipping reports only come out quarterly. But just reading these types of reports definitely add to your knowledge base. Now, in the first seminar, part 1, I talked about the 10 common mistakes that futures traders make. And over the years, I've created 3 different tools that we use in-house for our own personal clients and for myself that I've developed from reading other sources and understanding how the markets work for me, and I just distilled them down into 3 tools. This is really an introduction to these management tools. I can't really go, with the time limits we have and with the way these seminars are designed, I can't go verbatim with explaining each one in full depth. But I'd like to let you know that if you ever want free copies of any of these tools that I mentioned here, just give me an email at noble@liverpoolgroup.com. and I'll send you a free kit of what these management tools are, and you'll have the full versions at your disposal to use, and you can talk to me at any time to find out how to use them properly. Now, there are 3 trade management tools. The first one that we have is a trading plan questionnaire. The second one is a trade worksheet, and the third one is a trading journal that we maintain. Each one has a specific purpose, and all together they make for a rewarding trading experience. Whether you're winning a trade or losing a trade, they open your eyes to the longevity of the fact that you want to be successful over time and that one trade is not going to make or break you. So let's begin. We'll start off with explaining the trading plan questionnaire. Now, the goal of the trading plan questionnaire is to give you specific numbers to target for when you're looking for returns. Now, this is very important. We've all heard the hype about how one guy made $1 million trading futures, and I'll even talk about one of those guys here in this seminar. We've heard about Richard Dennis, who took $400 and turned himself into the largest money management firm and made over $200 million over the course of 19 years just trading futures. There's a lot of great stories and a lot of hype out in the marketplace, because for every 2, 3 guys you hear about succeeding, the truth is 96 to 97% of futures traders fail. And part of that comes into the fact that they don't look at futures trading as a business. More so than any other investment, you have to look at futures trading as a business because of who you're up against. This is not philosophical or esoterical. The bottom line is, if your main competition is hedgers and they represent the majority of the market, and they're thinking of their futures trading as a business, and they're matching up their bottom line with how well they trade futures, then you need to think of yourself in a very business-like format. And the best way to do that is to set out from the beginning with an idea of what returns you plan or hope to accomplish. And once you set down that goal, you work backwards and you develop the objectives to attain that goal.